Let's go to the business news now with Giles Beckford. Good evening, Giles. So, Smith City is saying it could be sold as soon as the end of the week. But is this a COVID thing or is it something else?
Well, it's a company that's really been going through the trials and tribulations of trying to find a presence and a new basis for its business for some time now. In 2015 or so, it started a rapid expansion, looking to broaden its appeal from its South Island base. It bought into the North Island. It expanded into Auckland, although it didn't quite get the right mix of business there or the right site, and it found itself having to restructure. It also found itself caught with underpaying its staff, who were required to attend meetings each day, but they weren't paid for them, and that resulted in an employment court ruling, which the company was pleased to accept, but it cost them another $1 million or so. It's been looking for some way to have sufficient capital to expand, to get sufficient bulk and volume in its sales. But I suspect that, like quite a few companies out there, the pandemic was really the one that's the straw that's broken the camel back. And from this point of view, it was struggling to find new capital. It got an extension on its financing from its bank. It was then looking, and it warned just a week ago that it really needed more capital in that business. It was looking and warning of shop closures, job losses. It's found its new source of capital, which is in fact a new owner, but that is subject to the new owner finding sufficient funds to go through with the deal. It's valued at $60 million, but into the bargain it means that Smith City will close probably 7 shops with the probable loss of around 100 jobs. That's about a quarter of its workforce. Now, the company says that in the end, this was the only way to ensure that it had a long-term future. As a result of this, Smith City shareholders are likely to find themselves with really no value in their shares at all. The company may end up with around $8 million after the deal. The buyer is a private equity company, an investment concern called Polar Capital, and that was founded by Colin Neal. He was the founder and owner of Big Chill. Now, that's the big fleet of trucks that you'll see around the country taking refrigerated and frozen goods from meatworks and into supermarkets and the like. That was sold last year for more than $100 million. So the capital from that sale, who knows whether the funds will be reinvested into the Smith City deal, but the company is struggling. I suspect there are a lot of other retailers, not on Smith City's scale, but in their same predicament, and we may have more stories like this in the future.
Also, the service industry, it's all but ground to a halt in April. What do the numbers tell us?
Well, Smith City, of course, is just emblematic of the problems that hit the retail sector, and the retail sector makes up so much of the services sector, along with travel. No surprise then that come the lockdown last month, that everything should fall off the cliff. The reading for this index, which is compiled by Business New Zealand and the BNZ, is the lowest on record. So that's the lowest in about 13, 14 years. Allied that with the manufacturing survey that was out on Friday, it tells you an economy that basically hit the wall in that lockdown in some key sectors. It will be no surprise, and it's further tangible proof that the growth rate will in fact be negative growth. There'll be a contraction in the economy for April, May, into June. It will take quite some time for the economy to recover out of this. In key sectors, services making up 2/3 of our gross domestic product, the value of the economy.
Joel, shall we take a quick gallop around the markets before you head off?
Oh, let's have a canter, why don't we? A modest rise for our share market today, up 27 points, about 0.25%, 10,758. And the Kiwi dollar, 59.5 US cents, 92.4 Australian, and just a smidgen over 49 British pence.
Thank you, Giles. That is our business editor, Giles Beckford.